All righty, welcome everybody. It is Wednesday, June 12th, 2024. I want to just have a session today. We'll cover a bunch of different topics. I don't have a whole lot of specifics. I know there's a handful of questions in the mod channel. I think there's a bunch of questions in the main channel. I thought it would just be easier if I jumped on and maybe just tried to cover some of these. And if you guys have questions, Igor's here as well. We can both jump on and answer questions for you. I thought it would just be good to have a session in here today. So let's get rolling. Igor is also co-hosting, so you can let some people in. And we'll get started. All right, last group coming in. All right. I may also have you guys turn your videos off too. That way I will reduce the screen so that they don't show up on everybody's recordings when we're done. So Jeff will probably take you off here as well. I think we may have gotten everybody for now. All right, so hopefully I got everybody. If not, if you could just keep your videos off and you can keep yourselves on mute as well. But if you have questions, jump off mute and let's get going. So I just wanted to jump into a few things and talk a bit today on some of the questions that we saw. So one of the questions in Discord a little bit ago, I know Craig popped up talking about adding calls to 112s. So we'll touch base on that briefly. And some people had asked some questions this morning on some Strangles. So I'm going to go through Strangles a little bit more here today. So we'll touch on some 112s. We'll touch on some Strangles. And then we'll also look at some of the other questions, and we can look at our accounts. And I want to make sure that I reiterate how I'm doing stops as well. So let's start on Strangles. And we'll cover it from there. So number one, when I'm trading Strangles, I have moved to a 1.5 x loss, which would be a 2.5x stop, because you're going to subtract your original income or premium from the trade. And when we talk, I typically talk about a 2x loss. Now, a 2x loss is a 3x stop. So I just want to make sure everybody here, especially if you're new, that we're all using the same lingo. I don't stop out on anything at 3x except for the 120-day strangle trades, or I'm sorry, 120-day naked put trades that I do that are specific campaign style trades. Those I will do a little bit of a different setup with them. And those are a 40% premium capture and a 3x max loss, which would be a 4x stop loss. So I want to make sure you're all on the same page, but that is for just those naked puts. Strangles, it's a 50% profit target with a 1.5x loss, which would be a 2.5x stop loss. If we're talking the 112 trades, there's a couple different ways to exit. One would be at 1x the actual full size of the trap. So whatever the trap profit is, you can close the whole trade at that. But typically, since I like to manage the naked puts separate from the PDS, I'll typically just stop at a 2x loss on the naked puts, which would be a 3x stop on the naked puts, and then we'll let the put debit spreads managed, be managed separately. There's no stops on those because it's a debit trade, so the only loss would be letting them go to expiry and losing the premium that I paid for them. Okay, a couple more people here. So just making sure that you're all on the same page and that you fully understand before you jump in and start trading any of our strategies here, that you've read through either my trade plan, you've watched several of the videos, you've built your own trade plan. Don't just jump in and just start winging trades. I mean, there's a lot of trades. I mean, I'm putting on probably one or so a day. Igor's probably putting on one every day or two at the most. So you're getting anywhere from 5 to 6, 7, 8 trades just from Igor and I alone. Then you can throw in, Eddie and Stacy and Rob and Timur and Andy, and you throw in those folks, and then you go to the members trades and you can follow Christoph or any of the other folks in there, two that are posting their trades, and all of a sudden now you've got 90 different trades to choose from for a week, which is great. What you should be using that for is giving yourself an idea of, I've already got a trade plan, and what I want to do is come up with ideas for more trades that fall within my plan. So let's look at mine for a minute, and I'll share my screen and we'll go through this. But I want to start here because I think people chase stuff a little too much. So let's just jump in. All right, so a short version of my plan would be look at my trade tracker, and you can see what my typical trades are. So these in light blue, these are my core 4. These are my core trades. Okay. ES long-term 112, pretty much standard trade for me. Okay. Obviously, that trade doesn't require a whole lot of anything except that when 120 days roll around, we put on the trade. Now, there's been some people, the mod questions on Discord here. So when we go through these IN mod questions, these are questions directed towards Igor or myself, or sometimes Candy or Gabe to answer. So sometimes members will pop in and they'll try to answer the questions as well. But don't assume what my trade plan is. I do not put these on the 1st or the 15th of the month. I don't put them on every 2 weeks. I put them on typically when 120 days rolls around. Now that is on my main account here. And what are we at? 128 days for the next one, the October 18th. So in 8 more days, not trading sessions, but in 8 more days, I'll put on a new long-term 112 trade. And I will put it on regardless. I will put it on whether the market is up, whether the market is down. I will put it on whether there's a Fed meeting or no Fed meeting. Doesn't really matter what's going on. I don't care if there's a PMI press release the next day or a CPI press release. I put them on because you can't predict what the market's going to do. Some of you yesterday wanted to hold off and wait until after today's numbers came out so you can put trades on. Well, because you held. Why? Because you don't know what the market could go up or down. You have no idea. Why wait? So to me, timing is a fool's errand. You can't figure out what the market's going to do. Who knew that CPI would come in potentially light today and the markets would rally 61 points today? If you knew that, you should have probably been playing something in the active trading service of trading, scalping ES or something for the day. That would have been the trade, or putting on a butterfly in SPX at the end of yesterday. Any of those things would work, okay? But we don't know what was going to happen, so why would I wait? If I wait until after the meeting, and then after Powell said, after that announcement, now I got to wait till 2 o'clock for the Fed notes, and then I got to wait till 2:30 till Powell speaks, okay? Because he can kill whatever comes out at 2 o'clock if the market rallies on the Fed statement, okay? But Powell comes on and throws cold water on that, and then the markets go down. You can't predict that stuff. We're trading 120 days out. Just put your trades on, okay? So that's one. For me, you can't predict what's going to happen, and you can't predict the market reaction to what's going to happen necessarily either. And sometimes when that Fed statement comes out, the market reacts one way and then turns around in 5 minutes and goes the other way. So usually that first direction is wrong on those Fed meeting notes, but who knows? Who knows what can happen? So to me, a campaign trade, I put it on rain or shine. I don't care what the market's doing. Okay. At some point during that day, I will put it on. If you waited, okay, you're going to be 60 points farther away. If you put it on earlier, you're 60 points better off today, but maybe the next meeting it'll go 60 points the other way. You have no idea, but 60 points in 4 months isn't really going to affect you a whole lot. Okay? So either way, you're getting paid for what you're doing. You're taking in premium on that. And the volatility is really all that matters. Prior to these meetings, volatility is going to be up. So you're going to get paid more after the meeting, even if the news goes against you, volatility may be coming down. Okay? We're getting paid to put on trades that have volatility. Okay, we're getting paid to go out in time. Right. So timing just not going to do anything for you when you're looking at a 4-month out trade or trading leaps. Now, if you're trading 0 DTE or you're trading 7 DTE trades, well, of course it will. Okay, now you've got to start to think, oh, can I put something on? But if you're going to do that every single time there's a piece of news coming out, I don't know when you're ever going to get a trade on. Because there's news once a week, twice a week, sometimes 3 times a week. All right, so there's ES. That's how I put it on every 120 days when that rolls around. And I don't really care for the most part what's going on. All right, and those both legs of that are managed separately. Even though now in Tasty, you can put it on as one trade, I'm still managing the naked puts individually, the put debit spread by itself. All right, so now we go into 112s on futures. So when you're trading 112s on futures, and let me shrink it down, make sure you can still see as long as my face is not in the way. In fact, I can probably stop sharing that. Right, you don't need to look at me. If you're trading 112s on futures, I didn't say 112s on ES. I didn't say 112s on GC, 112s on CL. It doesn't matter. I am trading 112s on futures. I am allocating $63,000 to that, 25% of my available allowed buying power. So of my 50% allowed BP, I'm going to use 25% of that 50% to trade 112s on futures. I don't care what they are. It could be any futures that are out there. ES, GC, CL, LE, SI, HG, RTY, 6A, doesn't matter. It's 112s on futures. Right? So we'll talk a little bit more about that, but these are discretionary trades. Okay, so this is a discretionary trade. Campaign trade. I don't know why. I got to see there, but it's not going to show up. Okay, so these are campaign trades. These are discretionary trades. Okay, or if you want to call them opportunity trades, whatever you want to call them. I call them discretionary, but so you can put them on whenever. But you put it on when the timing is right, based on whatever underlying you want to trade. If I have an opportunity to put a 112 on, fine. But now I want to look to see what underlyings make the most sense. All right. We're going to talk more about that because that was some questions back in here, was to figure out, what trades, would you put on this trade? Would you put on that trade? I'll give you my criteria for them. Okay. And then futures strangles. Again, it says futures strangles. It doesn't say strangles on ES or strangles on CL or strangles on gold. These are just futures strangles. I'm going to put roughly 15% of my buying power. And again, these are minimums. Okay, you can exceed any of these, depending on what your buying power is doing. But at least at a minimum, I want to have these types of trades on. Right, so futures strangles, I want to have at least $37,000 in buying power allocated towards strangles on anything. I don't care what it is. Okay. And then lastly, I am doing 120-day 6 delta naked puts. These are strictly on ES. Okay. Now, do I sometimes do these on others? Yes, those would then fall into a spec trade category. This is ES. In fact, if I have to put it here, okay, because sometimes I have to be very specific and literal, otherwise people get confused. So these are ES 120-day 6 delta naked puts. Right? They're very specific, and this is a campaign trade. Let me go over here and change this. Okay. C for campaign, D for discretionary, D for discretionary, C for campaign trade, discretionary. Okay. Hedges are pretty much campaign trades. Do that. I don't know why I can't copy and paste that here. Funkiest thing in the world. Okay, and then Bill ETF is pretty much, I don't know if you want to call it a campaign trade, but essentially that's what it is. Okay, so it's campaign. And discretionary. Okay, so this gives you at least a little bit of a sense. Okay, and there's a big difference. Okay, there's a big difference on these, and what they are and how they're all managed. Okay, so some are campaign trades, some are discretionary trades. So yes, Squeak, this particular trade is only on ES. Now, I will do this particular trade on other underlyings, but then it becomes a spec trade. So I do have them on gold and oil and bonds right now, which is typically not the best way to do it, but they're kind of one-offs. I'm not doing them like on a regular basis. I just saw the opportunity to put on a naked put, and I did it. All right. So this ES 120 day, that is a campaign trade. If you read my trade plan, okay, it's very specific about these things. And I keep having to tweak my trade plan because people have a question and they don't understand what I'm putting in here. So my trade plan's gotten so big because basically I'm trying to anticipate all of your questions on it. But when I look at this 120 day 6 delta naked put, okay, trades using options on ES once a month. Okay, it doesn't say any other underlyings. It's very specific. If you didn't know what I'm saying, you didn't read the trade plan. Okay, BP use. This is how much I'm spending. Okay, this is the amount of credit I'm trying to look for. Okay, so I can size it properly. Right, I'm entering at 120 delta, 120 DTE, 6 deltas. I want to get a certain amount of credit. Okay, place a new trade as soon as the profit target is hit. So as soon as we win, we put on a new trade. So it doesn't mean, even though we started doing once a month, these things can go on every time we hit profit. Okay, we will close either a 40% winner, okay, or a 4x initial credit stop loss, which is a 3x max loss. Okay, you could take assignment if the opportunity is good. And again, I have to put things in here because people will freak out. But it's rare that I would do that. But I give myself the opportunity to do that. Right? So very specific. Okay. Otherwise, if it's not on ES, it would become technically a spec trade. So anyway, I wanted to cover this with you just so everybody understands. So some of these trades are campaign. They're going to rain or shine, I put them on. Okay. Some of the, and then I guess technically hedges, I'm putting them on rain or shine the beginning of every month. And bill, it's just always on rain or shine. Okay. I'm not adding new trades. It's just I'm always keeping it at 10%. Okay. So forth. And then a couple of these are discretionary. You put them on in whatever underlying makes the most sense at the time. I'm just trading them as per the plan. In here, what is a 112 trade on futures? Any future. Okay. I prefer some of these, but I can do others. It's whatever makes the most sense. Okay. And then the same thing would be up here on Strangles on futures. Okay. Again, I don't specify. You can pick them on any of these underlyings that you want. Okay. But I know at least what I'm looking for. So anyway, this gives you the sense on that. So there's a couple questions in chat. So let's take a quick look and see if any of these pertain to where we are in this training right now. if you're looking for 1.5 to 2% a month, do you see anything wrong with just doing long-term 112s or 112s? No, not at all. Okay. They will work totally fine for an account trying to get 1.5%. That's what I do in an IRA. Okay. My goal in my IRA is just 1.5% a month, and really all I'm doing is almost all 112s, mostly long-term 112s, a few others, and then maybe a strangle here or there. I mean, my plan has a little bit more of that. But if you don't need the extra income, you don't have to do strangles or any of these other things in there. So, and then again, campaign trades means you put it on rain or shine based upon a regular basis that's either based on time or an event like stopping out or something like that. But most of the time it's just based on time. Okay. But sometimes it's based upon, hey, if you close for a winner, you put a new one right back on. It is a campaign, not up to your discretion as to what to do. It's rule specific. All right. Let's see. Yes, Squeak, I am not campaigning all the big four. I mean, I happen to have those trades on, but they're not campaign style. We are close to hitting profit on a couple things. Okay, my position sizing on the ES 120-day naked put, I think it's in the trade plan. I just went through it here. So here's your position sizing. Okay, I'm sizing it for based on a 3x loss. I size it for 2% max loss per net lick. Okay, so if I'm going to take in a credit of 850, okay, and I have a 3x loss, okay, it's going to be 2550 or so. Then you may size it up. I mean, this is not sized properly anymore based on the new account size, but I could go higher. Okay, so this is the largest I would go, but when I look here, I'm only allocating 5%, which means I'm only going to allocate about 12 grand in buying power, which is going to limit me, okay, to using about $3,200 in buying power for this. So I'm generating about $1,300 on ES, and we'll take a look and see what that looks like. But okay, I'm only allocating $12,000 to that particular naked put. Okay. And if you see this last trade was 3 contacts at around 10,000. So if I would have gone more, I would have been over my 12, but I'm pretty close to right around $10,000, $12,000 on this thing. I took in 2,800 bucks on this particular thing. A 3x loss on this, okay, would put me, which would be a 4x stop, but a 3x loss on this is $8,400, which is less than 2% of my net lick. So I'm sized perfectly for that particular trade. Okay. Hopefully that made sense. But I'm sizing so that a 3x loss would be less than 2% of my net lick on these ES 120s. Okay, but that's all that this is ES 120s. All right. Now, again, you can exceed these, but you can go over. Let's see. Real quick, is there back testing on these? Everything I do is back tested. So all of my back tests are there. They're probably buried by 900 other people trying to come up with a different version of what I did because they don't like the fact that I came up with apparently a good back test and they want to tweak it and do it. Trust me, if I back tested something, I don't just pick something out of thin air, back test, and if it looks good, I post it for you guys. Okay, so if I post it in back test for you, believe me, I ran 20 to 30 different versions. I ran it at a 2x, stop, a 3x stop, a 4x stop, a 1.5x stop, a 2.5x stop. I ran all of those different stops with profit targets of 10, 20, 30, 40, 50, 60, 70, 80%. I ran all of these combinations to see what worked best. And for these 60-day naked puts, you know what works best? 40% profit target and a 3x loss. Okay, that gave me the best win rate / P&L that made sense for what I'm trying to do. Okay, So all of my stuff is back tested. Like I said, some of it gets buried because everybody either comments or tries to put their own back test in my back test, but it's all there. You can check them out. But that's how I figure it out. I mean, you've got to check out every different potential version of something to see if it would work, and then you got to put it in play and see if it works in real life, which is different than backtesting. Backtesting just gives me a sense of, yeah, it looks like an interesting opportunity. Let's do it. Okay. Same thing with Strangles. I backtested different stops, different profit targets on futures, on Strangles, mostly on SPY or SPX, and I just tested the daylights out of it until I couldn't beat 50% profit target and a 2x loss. The 1.5%, I did a Strangles update for you guys, I don't know, several months ago, and showed that we actually improve our win rate a little bit, and we improve our overall, or our win rate doesn't change much to go to 150% loss from 200. So our win rate doesn't really get affected terribly, but our profit goes up decently because we have even more. In one loss now doesn't wipe out 4, it wipes out 3. And at 90% or 88%, you're going to be more successful. You're going to have 1 or 2 more winners every 10 now than you had before, which is over time, it's going to pay off. And if you are paying attention at home, you can see strangle-wise, I mean, I'm sitting on 6 Strangles right now, and I closed 1 this morning. Okay, so I closed 1 this morning. Okay, and I just added a Strangle as well. So I just added a new Strangle. I'm sorry, did I say 6? I meant to say 8. I had 9 Strangles on, okay, and now I closed this one earlier today. So I closed 1 earlier today for a winner, okay, and then I will be putting a new one on today. And I told you I was going to do a replacement on that particular trade. Okay, which is exactly what I did this morning or this afternoon, and it just closed right before we went to air on this thing. But I did put on a September 13th Strangle. We can walk through it. It was the 62.95. I took in 67 cents for that thing, which was fantastic. I used 5 contracts again. It's going to pay me initially here $33.50 on it. It used 13,443 in buying power, right? And now I've got a new CL Strangle on. So technically now I'm back to 9. So brand new Strangle that I just added. I'm very heavy on Strangles. My minimum, if you remember, was 37,000, almost 38, almost $40,000. And right now I'm sitting at $112,000 in Strangles. Okay. But everything else is still on. So it's not like I stopped doing any other trades. It's just with my buying power the way it is, with the trades set up the way they are, I have buying power to use. And to me, a Strangle is going to give me the best return on margin, okay, of any trade. And the more I do of those, the more I do of these things, the better off I'm going to be. So of the core trades, okay, I can't put on more ES 120s. That's a campaign style trade. But from a discretionary trade standpoint, really a Strangle is the best trade you can put on. Okay? And you're winning at a 90% win rate. And now I've got on Strangles, okay, if you include today, we're now 31 of 33. So 31 of 33, we're at 94% win rate on Strangles. Don't tell me they don't work. Okay, so 94% win rate on Strangles. Next to the 112, it's the best win rates I have. Okay, so it's a fantastic, they're all good win rates. Okay. And I'm only banking on a 90% win rate here, not the 94 that I'm hitting. Okay, and I should be generating $2,700 a month in Strangles. And I've already got that in for this month. I had 9,000 last month 4,000 the month before. The month before is when we lost those gold and copper strangles, and then 10,000, then 6,000. So we've made $26,000 in 5 months, which is over $5,000 per month. And remember, my budget on this thing was hopefully I can generate myself 2,700, but I'm generating over $5,000. So it's definitely helping my account on there. So I hope that makes sense. On all of my back testing, Juan, is in options Omega. So option Omega is what I am using for back testing, and it's limited, but all I'm trying to do is come up with different types of trades and tweak them to see what maybe works best. And then let's put it in real life, and then we'll work it until, and if it works, great. If we can tweak it and improve it, like we did on Strangles, we went to 150% loss versus 200, and I think we'll be fine. Hopefully this is helpful. Hope you guys are finding this helpful. But just trying to give you some insight as to what I'm doing to make it easy. Yeah, the strategy builder allocations really, to me, is a minimum. I've covered it in other videos, but if you're newer and you may not have been on here, but I do cover this periodically when I do these types of things. This is a minimum. Okay. It may also be a maximum. I mean, technically, if you built in your BPs correctly, if you've done all of this work over here correctly, then this is probably going to be pretty doggone accurate. But for me, okay, what you're not accounting for here is the fact that buying power reduces based upon different allocations of assets classes, because you're not concentrated in just one asset, potentially in just ES. You're not in just naked puts only. You might have other strangle trades on. So now you have some naked calls that go with naked puts on different assets at different DTEs. As trades come off or trades get modified, it changes your buying power allocation. What you're not factoring in here is the fact that your buying power typically will be lower than you expect it to be, because the way span margin is working with everything together. You'll end up with extra buying power that you didn't anticipate. And for me, I like to use it. Now, if you're someone, I had this discussion with Tony Rehan on our Tom and Tony Trades segment. And this is where I disagree with Tasty Trade, is that, with low VIX, you go with low percentage of buying power being used. If VIX is between 12 and 15, they want you to use no more than 25% of your buying power. I would starve. Okay. I'm using 50%, and I'm a trader. I'm going to use all 50% of that. If it gets to 49 or if it gets to 50, I'm putting a trade on. Okay. I'm not sitting down. I'm not letting it drop to 40. I want stuff working because I want to make money. So I want my buying power working hard for me. Now, that's me, but this is a trading account. This is not my life savings. Okay. If it's your IRA, or if your risk tolerance is not the same as mine, it's all good. Drop your BP allocation to what makes you comfortable. Okay. We are trading futures. They are risky. There will at some point be a decent sized sell-off or event that is going to make a bunch of you guys really, really nervous and really, really upset. Okay. It's coming. At some point, you're getting a pullback. Okay. You've only had little glimpses of it. In fact, I saw something today, maybe it was on Twitter, that says we have not had, this is the longest time, is it the longest time in history, or one of the longest times that we've ever had that we didn't have a 2% down day. So we've gone longer without a 2% down day than any other time, I believe, in history. So if a 2% down day comes, okay, I'm waiting for the chat to explode on how red your accounts are. It's going to be coming. Okay. If you're not prepared for it, okay, then you're not going to be comfortable with it. And if these little pullbacks that you got, a month or two ago, didn't make you a little nervous, okay, when back in April, the market dropped from like 5,300 to 5,000, okay, if that didn't make you a little nervous, or you didn't like the fact that your account is red, you're using too much buying power, you're taking on too much risk. Okay? No black swan hedge is going to help you, okay, with that $300 downturn. Okay, you're not even going to come close to a black swan event. But if you're going to lose 5, 6, 7, 8, 10% in a month or 2 or 3, okay, black swan hedge is not going to help you. Some hedges might, okay, but you're going to see red numbers. And you've got to make sure that you can reconcile that with your risk tolerance. If you don't like red numbers, okay, then dial it back. Okay. I don't care about red numbers because I like green numbers more. So I'm willing to take some losses here to make money. I'm stockpiling money now. I'm building it up. I'm using all my BP. If things start to get ugly, then I freeze myself and I don't add trades. Okay. And when my buying power doesn't let me, I just stop. I just shut myself off. Okay. So yeah, Tom, maybe that might be it. But yeah, that's almost what, 1.5 years. I mean, I think, like I said, I think it's the longest time in history or something like that that we have not had a 2% down day. Okay. When it comes, it's coming. Okay. We haven't seen much more than a 1% down day. That's like 60 points. Okay. 2% down day is going to be like 120 points or something like that on the S&P. All right. So anyway, I wanted to make sure we cover that. Hopefully this is all good and clear. It's not going to be today. Oh, yeah, VIX is not going to see 20. I mean, VIX might go to 20. It's all good. It ain't going there today. Unless something unusual happens. Okay, but if my buying power goes up, I freeze new trades, and B, I watch things come off. Also, when we manage our portfolio, the one thing I want you guys to think about here is, where are your current trades? So let's take a quick look at the Income Navigator portfolio, and let's walk through this. Yeah, VIX needs to be at 20%. And Igor and I we've mentioned it in the last Zoom, and we'll mention it in any other trainings that we do. We are both of the exact same opinion that we prefer to trade in a low vol environment. Okay. We like lower vol. I don't really want to be trading when something's at a 90 IV. Okay. Again, I'll disagree with Tasty Trade that, hey, we want all high IV. I don't want something that's volatile and crazy. Okay. So those two of my Tasty Trade disagreements there is, I don't reduce my buying power based upon VIX, and I prefer to trade lower volatility instruments because they don't move as much. I would like something that's flat and boring and never moves. Okay? There isn't really too many of those things, but flat and boring and never moves. I guess you want something flat and boring that never moves, go trade SoFi. Okay. The world's worst freaking stock that never moves. Okay. But overall, you don't want high volatility. You don't want things. I don't want to be trading in super high volatility timeframes. All right, so those are two of my things that I don't like. All right, anything else was on here to answer before I move on? Okay. I don't know that there's anything, maybe some statements. All right, so we take a look at our trade. So if I look at the Aussie dollar, this strangles at 28% right now. It's totally fine. Nothing wrong with this trade. And I guess what I want to say is I'm sitting at 52% buying power or something like that when you subtract the bill. Okay. So would I put a trade on at 50 or 52%? Maybe, but I'm taking also, when I'm running through these, nothing to do here. Do I have stuff that's going to come off soon too? Because if I think something's coming off in the next couple of days, I might put a trade on and go to 55% or 57 or maybe even more. Okay. I pretty much stick to my plan, but either way. All right, on the euro, this thing's down. Huge up day though. This thing's down a couple $100 now. Nothing to do there. Oil. I got some call side call debit spread that was part of a call side 112. That thing's just going to expire worthless in 2 days. There's nothing to do there. I have another 112 here. Nothing to do on this one. Okay, I have another 112 here. This is the one we put on yesterday. This thing's up 15%, by the way, in 1 day. And so not a bad opportunity to get in. So we put that trade on. Okay. We're also sitting on the new strangle that we just put on that I showed you guys a few minutes ago. So this is the September 17th, 97 DTE strangle. I'll group it. I didn't have time to even do any of this yet. And I will set my stop. Okay. So stops are set. I'm good to go. So my strangle's on, my stop is set. I can go to sleep now and not really think about it. All right. And then we do have a 120-day naked put. Okay. This is not a campaign style trade. It is a spec trade. Okay. But it is on. It's up 20% in 2 days. Okay. Why did we put that trade on? Well, 2 days ago was a pretty good up day as oil bounced off of a low. I felt, and I explained it, that I think that's a good day to put on a naked put here. So that's oil. Now, oil is, you can see there's 5 expirations worth of oil trades going on. It's a big part of what I'm trading right now. And overall, when I look at my total allocation, oil is the most, but it's at 21.6% of my whole account. That's it. 21% of my account is oil. So it's not like it's 50%, it's 21%. Okay. And then look at ES. I got a BA 112 just to put debit spread's going to expire in 2 days. Who cares? Okay. Over here, I got a hedge, which is a loser. Don't even like to look at those. I got 2 112 trades that are just put debit spreads now. We're almost at 90% here, which again, 95 is typically my take, but we'll see what happens if, if I talked about potentially taking some of these off at 90, if it makes sense. I mean, right now, if you close this trade, okay, how much do you make? You're going to make $570 on this particular trade. Okay. So $570 on this is what I'm going to close it for. If you want to give up half of that 200, is it worth it to give up $200 in profit to free up the buying power? I'm sorry, on this one. Is it worth it to wait for that last 10, to wait for the last 250? Because right now at 90%, it's $500 to close this. If I go to 95%, it would be $250. So I would lose $250 by closing this at 90 versus 95. This is a $500,000 account. Is $250 that big of a deal to free up buying power? I know I've already gone through it, but again, let's close this thing. All right, so how much buying power am I freeing up? $8,000 in buying power to close that. Is it worth $8,000 to close this? I'm sorry, is it worth $250 to close it today or tomorrow at 90%? Is it worth $250 to get $8,000 more in buying power? How long will it take me to get to 95? Well, typically it takes 90 days, right? Yes, yes, or yes. Typically it's 75% of the time to get to 95%. So if you have a 120-day trade, okay, 75% of that's 90 days. Typically at 90 days is when you hit 95% winner. Okay, I'm at 83. If there's something that's a screaming buy right now that I want to get into, I would give up $250 to buy $8,000 of buying power back so I can put on a new trade. Okay. I hope that makes sense here. So you got to use a little discretion. Yes, there's rules, but then there's also just intuition and discretion. This strangle is just doing nothing. It's down 65%. It's just doing nothing. And then hedge 112s, dot, 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 dot. So nothing coming up. I got something close. And I guess my point here was this is close to coming off right now, which means if I see something I really like, I'd put it on knowing that probably within the next couple of days, this will come, I may take this off. So this is the point I'm making, is that as you run through your different trades, you get a sense of what's going on. Here's another 120-day naked put. Now, this is the campaign trade version, okay, because it's on ES that we talked about earlier in the Zoom. Now, this thing's at 36%. So now we're getting close to this coming off. And how long does it take for these 120-day strangles to come off? It takes 30 days. We're at 22. So in the next 8 days is really where we would expect this to come off. Okay. So we would expect in 8 more days to come off, this to come off. So again, I'm going to free up, if this closes, I'm going to put a new one on anyway. It's going to free up $8,000 in buying power as well. Okay. But I'm going to reuse it for another one of these, so it really is not free. Okay, so let's keep moving on. So now we got gold. What do we got going on in gold? Well, we got a 112 trade in gold that's up 98%. The naked puts are at almost 90% here. This is probably, it's a discretionary trade, right? Because it's in gold. It's a 112. It's just a 112 on futures. Okay, discretionary trades. You want to take them early? You take them early. You do whatever you want to do, because all I need to book, okay, on 112s is $3,500 a month. Okay, so I have to close roughly 3 of these. So this one's probably going to close. I could close it now. Do we have any of these that are closed for the month already on 112s? The answer to that question is actually we have a loss on 112s because we had a gold 112 that bit us a bit. Yeah, we got one that bit us on this stupid vol spike, but that's it. So we could close this, okay, and free up buying power to do something else. If I closed this trade, okay, right now I free up $15,000 in buying power, okay, and it's going to cost me $20 to close the whole trade, okay, right? Because it's 100 multiplier. It's at 0.1% or 0.1 is the cost. Okay, so, and you've got 2 contracts. So 2 times that would be 20 cents times 100. Okay, you can do the math, okay? But 100 times 20 cents, okay, is only $20. So do you really want to wait on this thing to free up 15,000 in buying power? What would you guys do on this trade right now on gold? You're going to wait for the 95 and leave these naked and leave the put debit spread on? Now, that's also a possibility, is I could leave the put debit spreads running, which would be a hedge on gold. Even if I just closed this, the naked puts, right now, it's going to cost me $200, but I'm still going to free up $16,000 in cash. Okay, Robbie says close it. Okay. Maybe Robbie's the only one. You could close the whole trade. You could close just the naked puts and leave the PDS on and get $200. Or I could close the whole thing right now. It would cost me, basically, I would get out of this thing for $20 and free up all of that. So, yeah, right. So Dirk is kind of on the money here is, yeah, close it. If you see something else that you want, close it. Okay. I just added a CL strangle today, and because of that, okay, in this account, let's see if we need to do any kind of a Okay, so we're sitting at 62% on the main trading account here. So we're sitting at 62% in BP usage, minus bills 10%, that's 52. So I have 52% buying power in this account. Okay, it's technically over the 50, but knowing that I could close gold today, knowing that I can close that naked put on ES today, it would cost me $250 and free up another $10,000. I mean, I can free up $25,000 right now. Okay, so this is what I want you guys thinking as you go through your portfolio, and I know I'm going through it slowly, is, well, would you, you're always asking, would you close this early? I don't know. You can. And you guys always, always want a rule, but for me, it's, well, what else would you do with the money? Okay. Would you, there's no sense closing this, as Dirk said, if I don't have any other, if there's no trade setups anywhere right now, there's trade setups coming out of every orifice. So there's a trade everywhere right now. There's a ton. There's so many setups. So if you wish you had BP, well, you really do. You just got to give up a couple $100 of your profit. Now, if your account is $5,000 and you're going to give up $200 to do it, okay, that's not going to be a good deal. You don't want to give up 5% of your account. For me, $250 on this account, okay, is 0.005. Okay, it is 5/100ths of a percent. Okay, yeah, I'll give up 5/100ths of a percent to get another trade that could come off in 30 days instead of me waiting 8 more. Maybe and there are strangles that we have closed. I did this yesterday with some folks. My average days in trade is 24 on strangles. Okay, I've had strangles come off in as little as six days. Okay. 6 days I've had strangles come off. And you guys have had that too. So anyway, I think this trade could probably be closed. Okay, if there's something else to trade. Okay, now we're also sitting on a gold strangle here, which is up 12%. That's nice. And we do have a discretionary gold naked put because I was bullish on gold at that time. That was 26 days ago. Gold has kind of languished for a week or so. I'm not as rosy on gold as I was when I put this trade on, but it's not in any trouble, so nothing to do with it. Okay, here's another great example. This trade is at 80% profit. Okay, it's on live cattle. Okay, technically it's at an 80% winner with the naked puts at 76. The rules say don't do anything till you get to 90, 95, whatever. Okay, but if you closed this today, the whole thing, it's going to cost me $200, and it's going to free up 2,400 in buying power. 2,400 is not a lot of buying power to free up. Okay, and you can see it here in the cap required column. It's 2,800 here. Okay. So, do you want to give up $200 to free up 2,800? Probably not. But how much more can I make on this trade? Okay. Hang on, 0.425. Okay, we'd have to close at 40 cents. Okay, if I just close these, the multiplier is 400, 40 cents. $161. The most I'm going to make on this trade is probably another $160 total on this trade. So do you want to waste $2,800 in buying power to make another $160? Well, that's actually a pretty good deal. That's over 5%, and this thing is going to close in less than 51 days. So it doesn't have to be closed, but if I wanted to, I could. I'd only free up $2,800 here. Okay. As Paul said, if I can get a better return on margin with a new trade, I'd close. So if you can, close it. Do you need $2,800? It's not a lot for this account. All right, NASDAQ. Right, we're at 61% winner. We have quite a ways to go. We're halfway through this trade. It's profitable. It's using about $9,000, as you can see here in the cap required column. So it's using 93.63 in buying power. You could close it, but why? There's nothing wrong with this trade. If I could see something else that I would want better, but we're only at 61%, we have a long way to go on this trade. So I'd like to get more out of it before I close. RTY, we got a strangle on RTY. It's basically down 80 bucks. So nothing to do there. All right, now let's finish up with bonds. We'll look at a few other quick things. But I just want you guys thinking, you know, I can't put on, do I want to put on new trades? And if I can, where can I put those trades on? And then is there other things coming off? We've noticed that there's bunches of things getting close to coming off, and there's also things we could just close today and free up margin. I can't technically place a trade in this account because my buying power, okay, is at 52% for trading, which is technically over my 50. I'd say no trade because I just put on that oil trade this morning. But I could close something if I wanted to get a trade on. All right, ZB here, we've got a 1-1-2 trade. It's just to put debit spread remaining. This thing can come off in 9 days. It's just going to be a loser unless oil or less bonds tank. We got a strangle here. This thing's down 1,400 bucks. Nothing to do there. We got another strangle. This one's up 700 bucks. So we got two strangles on, just the newer ones struggling a bit because to the call side, the old one is doing just fine, 21%. Nothing to do, nothing coming off soon. Nothing to do there. And then we do have another 120-day naked put here. This one is at 32%. So it's going to come off at 40%. I'm very bullish on bonds. Okay, have been all year. I have been a bond bull most of the year. Bonds are up incredibly today. Why? Because interest rates are getting smoked. Why are interest rates getting smoked? Because the CPI reading today says inflation is easing. Okay? Now, if the Fed comes out and says something to the contrary, like, you know, even though the CPI, we think CPI is wrong, we don't see inflation easing, and we're not going to lower it all this year, then rates may rise, bonds may start to fall again. But I'm so bullish bonds because I think the inevitable conclusion is rates are going to get cut at some point. Igor, I think, did you post something about what was the percentage in September? Did it go up or down? You remember?
I think the Fed fund futures were pricing in about a 70% chance of a rate cut in September.
Okay. So again, I guess I could have looked it up, but I believe Igor 100%. Okay. So if you think that and we're sitting right here. Sorry, we're sitting up here. So yeah, 63% plus the 9 down here. So yeah, 73%, as I think Igor said. Fed's going to cut. So in September, that's the chance. Okay. Based upon that, I'm bullish on bonds, which is why I may not campaign trade this thing, but I think I'm going to keep selling naked puts on it. Okay? And I'm selling naked puts out to September, which is where I think they'll cut. So I have plenty of time to sit on this thing, but this thing's probably going to hit the profit target soon. Okay, the average is 30 days. We're at 22. We're already at 30%. It's working like clockwork. So this could come off. If this closes, we're going to free up a measly 1,400 bucks in buying power. So it's really not going to help us if that closes from a buying power standpoint. All right, makes sense. Yeah, and it's not like I put a whole lot of stock in this thing, but yeah, it is in my watch list or my favorites over here to go to CME Fed Watch tool, click on September, boom, there we are. We're at 27% of staying the same, which means 73% chance of cutting at least 1 to 2. Okay, so that's where you are. And if we look at what the trend has been, okay, that cut rate just dropped from 47% or a 53% chance of a cut yesterday, all the way to it went to a 70% chance of a cut today. That's a huge one-day move in that. So we're definitely looking at that as the possibility. So anyway, bonds, this probably going to come off. This strangle here is doing fine. So I've got 3 strangles on bonds right now. That's kind of my max. I won't do anymore. And this one's up. So 2 of them are up, one's down slightly. I love bonds. It's one of my favorites right now. All right, and then we do have the AMD trade on. What we did here was we sold a put credit spread. We're doing these at roughly 70 some DTE out in the future, and we're looking to see, we're either going to take profits at 70 to 80% on this, or we are going to take assignment. And if we end up taking assignment, okay, we're going to get assigned at 135, but this, I'm sorry, we're going to get assigned at 140, but this 135 put, if we get all the way down to 140 or lower, this put's going to start to increase in value. So we're not only are we going to take assignment at a huge discount down at 140 from here, which is 20 points lower, okay, which is pretty nice. So 20 points lower on this is a 12-point drop. So we can get 12 points drop in the stock, and we're going to make money on this long put, because this long put, while it may not necessarily go into money, although it could, if we're getting assigned at 140, we're within 5 points of this thing. Most likely this thing is going to double, triple, whatever in price. So I'm going to make some money here. I'm going to make some money on the original premium I sold. And then if I get assigned on AMD, then I'm going to go into the covered spread strangle, and I'm going to sell essentially I'm going to sell a call spread on this. Why am I selling a call spread and not a covered call on it? Because the thing I hate about covered calls is you limit your upside. The thing I don't like about the wheel, which goes back to covered calls, is you limit your upside and you're exposed fully to the downside. Okay, I don't necessarily like. And I don't like the fact that I would be owning AMD, which I think is a great company, and I'm okay with it. But again, if you tell me you're okay owning a stock, I'm just calling you all liars. Okay, nobody ever wants to be assigned. Okay, unless your goal here is to get into the stock by selling the naked put to begin with. My goal is to make money on the income, not to get assigned. Okay, I never want assignment on anything. Am I okay with it? I'm really not even okay with it. I'll do it if I have to. Okay, but it's the most painful, ugly thing ever is to get assigned on a stock. Okay, I do not want to get assigned. Oh, what the heck just closed? Anyway, so there's the covered strangle trade we have, but I would sell an at the money weekly call spread. Okay. So that's kind of what I'm looking for on this. And the reason I'm selling the call spread is because if it blows through my call, my short call, I'm going to get my shares called away. Again, you capture upside. But if I have the long put as well, or the long call, that should continue to appreciate. So if you blow through your short strike, you're going to make more money on the long, okay? Which is why I like writing covered calls or covered spreads instead of covered calls. So I love covered spreads, don't love covered calls, okay? Don't want to limit my income on it. And I prefer to write a weekly at the money call spread. So weekly at the money call spread. I don't necessarily like those too far away. All right, because I want to get the heck back out of a trade. Because if I get assigned, it's just painful. Personally, it's painful for me to watch. Now, here's the same type of trade on Palantir. We sold a put credit spread at 18, 15 is the width. If it drops down below 18, we're going to get assigned at 18, which is a nice discount from here. Okay. And if it gets close to that 15, these puts are going to gain in value. So I'll make a little extra while getting assigned. I'll get assigned at 18, and then I'll write an at the money call spread at 18 and 20, 18, 21 or something like that as a call spread. That way, if we rocket back up to 23 here, then I'll make money on the long puts as well as getting my shares called away. All right, so I hope this all makes sense why we have these two trades in here. I'm just giving you kind of an experiment. Now, this Palantir trade in 7 days is now up almost 40%. I told you I will take profit somewhere between 70 and 80% of the credit received. So we'll see. Maybe in another 7 to 10 days, this will hit 70 to 80%, and I'll just get out and we'll just do another trade on something else. All right, has this been helpful? Yeah, I just wanted to run through some of these things with you guys to give you a sense of how I'm trading it. Is there anything out there that would make me change my plan a little bit or change my approach? Tried to answer any of your questions. I think we got them. In mod questions, I'm just looking there. I don't know. Was there was a question in the InMod. I'm not 100% sure. Winidian said, how did Tom handle the naked puts of the PDS credit were not enough to offset the loss in the naked puts? Well, then the PDS is never enough to offset the loss significantly of naked puts. Okay. So it's never going to be enough. Okay, they don't hedge the entire naked put trade. If a naked put gets stopped at a 2x loss, the put debit spread's probably only going to offset a small percentage of that for you. However, it offsets a small percentage of that. The one thing we have to look at right now is we have already adjusted this gold put debit spread. We've already rolled it up from 23.50 to 23.55. So we've already adjusted it, and this whole thing still remains in the money. So we've already taken one win. How much did we make on that one? Let's look at this whole shebang. On the roll, we didn't make much money at all. What did we make? 40 bucks or something? That seems silly. All right, so we rolled it. We made a little bit of money, but I know what I did. I basically paid off the entire put debit spread. So now this put debit spread is totally free. So if I close this, the way I accounted for it, okay, we're going to make 560 bucks here. That is all free and clear because I've already accounted for the initial cost of the PDS with the last trade. So I made enough money on the roll to pay for the entire put debit spread and then have some change left over. And right now, this, if I close it today, will make me another, I think it was 500 and some bucks. Okay, 560 bucks is what I will get to close it. So I can make 560 bucks by closing this today. Now, is that going to offset the 3,500 that I lost on the naked puts? No, but it certainly makes it better. Okay, so it certainly makes it better. Yeah, that Uncle Tony call ratio spread thing, that is an Uncle Tony thing. That is not a me thing. I can't really even comment on that. That is not a trade that I'm probably putting on. If you know me, you know I do not like to sell calls. I do not like that markets drift up over time. I don't like things drifting up and selling naked puts against the trend. And right now, you can't tell me that ES is not in a trend. I don't know how he hasn't lost money on that, but he says he has not lost any on those. But he does manage those well, so he knows what he's doing. So we got some nice trades. Yeah, we're into this new strangle here, which is in great shape. So we put that on today. We're up 4% already on that. I don't think there's anything to do. All righty. So piece of cake, making money. If you want to close some things, I think there's things that can be closed if you see a great trade. Problem for me is I'm sitting on 9 strangles. I don't think I would probably put too many more strangles on, although there are so many strangle options. You could do wheat and corn and all of that too, which I really don't want to do. I do think copper is a strangle trade right here too. I think strangle on copper is not bad, but I also think you could do 1-1-2 trades. And here's just the last thing I'll say before I jump off is you could do some more 1-1-2 trades, right? I'm allocating $63,000 to 1-1-2 trades. Currently, those are not the long-term 1-1-2, standard 1-1-2s. And right now I have 1, 2, 3, 4, 5 trades on. The other ones I've all closed the naked puts on. These 5 trades account for about 21, 44, 74, almost $100,000 in 1-1-2s. Okay, so I'm over. But if I think that there's a 1-1-2 trade out there, I think I could put one on. And if I wanted to put one on and I'm short buying power, I could close any one of these other trades that we looked at today to put this on. And I think there's opportunities out there for 1-1-2s. I think Igor just did like an oil one. I just did an oil strangle today. I did an oil 1-1-2 a day ago, and I did an oil naked put 3 days ago. So not that I don't want to do anything more on oil. Bonds, I'm pretty full. I've got 3 strangles and naked puts. Gold, I've got a strangle, a naked put that are more recent. 1-1-2s don't necessarily set up well. 6A, I've got strangles on just one. It's in pretty good shape. I could potentially put another strangle on there. And then NASDAQ is another, or ES. I could just put a standard 1-1-2 trade on ES. So ES blowing through, making new all-time highs today. I think ES looks pretty solid. Everything's rising, but it is getting overbought. Be a little scary, but I think overbought's not a bad time to put on a 1-1-2, because if it continues to stay overbought and rise, you're going to do fine. And if it does pull back a bit, you drop into the trap. So I think there's opportunities for some 1-1-2 trades out there. And I also think a 1-1-2 on copper may not be the worst thing in the world. And yeah, so there we go. All right, you guys have a great rest of your day. Hope this was helpful to you. And we'll see you guys back in the Discord channel. So have a fantastic afternoon, everybody. We'll see ya. Rock on.